Mitch, what's up? Brian, appreciate it, my friend. Just get myself situated here and then we'll hop right in. So, essentially, my friends, today's lesson plan is an amalgam of the PMZ, a part of the big three signals up here at the top left. But mainly, what I want to dive deep into is the kind of data work that I'm doing on spreadsheets that is putting me in a position where I have positive expected value for the system in totality, and then I come into it and apply additional discretion, higher time frame analysis, maybe blend another indicator or two in there to further attempt to skew profitability in my favor with this particular system. So last time I tried to share a different window, it did not work. So please let me know if you folks can see the spreadsheet. Looks like it's popping up good on my side, but just want to confirm. All good? Right on. So this particular spreadsheet is if you were to trade SPY in a vacuum. So this is every single interaction that SPY had on the PMZ for the last couple months. And you can see if I scroll down in the data, I believe I have about close to 350 entries. I didn't input today's sequences. That's something I do later at nighttime. But essentially, let me scroll back up. Essentially, in a vacuum, trading SPY PMZ from the top side, from the bottom side, whatever it may be, this is kind of the EV of the system. Gives you about a 61% hit rate, win average 2.18, and then a loss average, it always stays constant at 1R. Let's see. We'll go. I have some other ones that are secondary trades. This is a little bit more deep data work that we can pop into if we get some time towards the end, but really want to dig deep into this first one. So the premise is that playing the PMZ on SPY to some degree is profitable. Now we need to then scale that out, understanding that trading anything in a vacuum, which I did trade SPY in a vacuum for a week to test it out, it's going to be a little hard. It's going to be a lot of green, red, green, red, green, red. I ended up green for sure, but taking every single trade isn't always in your best interest. There are particular time windows in the day, let's say midday, where volatility is a little bit lower. There could be sequences where, let's say, let me pop this, maximize the sell, and show yesterday actually. So yesterday for me on a higher time frame, while I was leaning long this entire time, as we started to finally move up into the supply zone that I have up here, I was a little bit cautious. It wasn't something that I was necessarily trying to be the guy that picks the top, but it was something that I wanted to be a little bit more aware of coming into the day. We had a massive day on CPI. Anticipation for PPI to be pretty good is probably priced in a little bit into this movement. Got this nice wick in the pre-market. And so for me, I was aiming to be short biased on the day. So then when we popped into the PMZ on that day, I'm short and I was trailing the entire ride down. I got this whole move, but because we're coming also from a larger time frame, supply zone, I tried to trail it for a little bit further of a move, and I ended up giving the last like 1/3 of the position that I had on. Gave a decent bit of it back, but that's okay. Still ended the trade, net net pretty green, very green actually. It's just not obviously as much as I was down here at low a day, but it was for the purpose of hitting that larger time frame move. Today, you come into the day. Sorry for that. Let me hide this. Apologies. Hide that. So today, that bias did not serve me as well. And this is something that I'm trying to do is not deviating too far away from the expected value that the system offers by trading it in a vacuum, but also not being naive to assume that I can trade SPY in a vacuum, if that makes sense, right? There's a little bit of cognitive dissonance there, but it's more so understanding that I need to apply greater context to be able to put myself in the position to capitalize on not just little scalps off of the PMZ, but on the moves that truly do have, you know, h- I don't want to say higher time frame continuation, that as well, but at least we're breaking out to a new high or a new low a day. Those are the bread and butter trades that make up, let me pop this up. Those are the bread and butter trades that kind of skew the win average a lot higher, making this a system that's, worthwhile to trade. At least something that I've been trading for a little while now, and it's been something that I've been enjoying a whole lot. So, in terms of how the big three kind of blends into this, it's not, it's just the big three signals, and it doesn't play too crazy big of a part. This was something that a buddy of mine mentioned to me, and it's something that I saw in observation. But essentially, where the big three is valid for me and where I pay attention to it is at and or around the PMZ. So let's say I'm trying to play the PMZ from the top side. In this particular sequence, I'm willing and able to take this trade immediately upon impact of the PMZ, should the big three signals either be green or gray. Or if it's, let's say gray and then it turns red right on that first candle, I'm still trading that, right? Because overall hypothesis is still to the upside. Or on top side of the PMZ, we want to play it long. Maybe it also plays into the higher time frame trend, etc. I want to take that. The nuance and where that changes a little bit is when the big three signals are red and I'm trying to play it from the top side, and or I'm trying to short off of the PMZ and the big three signals are green. Those are the trades that, I mean, I'm gonna throw out a fake number. That's probably kept me like 75, 80% out of trouble. There's definitely times like today, let's say right here, where I avoided it because it did that, and then it pops up basically almost to high a day. That was peak frustration for me. That was peak frustration for me on the day because I'm coming off of a great day shorting. I'm like, okay, we're still on the bottom side of um, supply. So I don't want to take these PMZ trades right here because we're also on the underside of prior day's close. And the past couple of days, SPY has just been kind of gapping, going, etc., continuing to open up above prior day's close, and it's a level that gets really defended on the S&P 500, especially if big money is trying to protect a particular perception about what's going on in the market environment. So to me, I was like, I have secondary trades that I'm willing and able to trade. I just don't want that primary trade off the PMZ. So that is where kind of these additional sequences come in. So this is the first secondary trade, and this is the second one. The first one is the first 1 minute 9MA tap at or above the current day's range. So if it breaks, I can get to that in a second. Let's see. Can't be fooled by randomness. Need to keep thinking in probabilities. You did the right thing. Appreciate that, brother. It was just like I said, peak frustration this morning, man. Peak frustration. But where was I at? I was at the example of, so my second playbook trade off of a valid PMZ test is the first 1 minute 9MA tap at or above, at or beyond prior day's range at that point on the day. I'm only interested in that tap and that tap only. I don't care about any other 1 minute 9MA tap anywhere else except for in that sequence. That's what the data I'm collecting is for. That is where there's edge. I just need to continue to get better at extracting it. So in this particular sequence, and one thing I do want to mention, if you folks are kind of seeing the spreadsheets, maybe getting a little bit excited and trying to think about, oh, how can I do that for my own trading and whatnot? I encourage you to understand that a lot of indicators, almost all of them, are lagging, and or they repaint and or they accommodate for the move. So while after the fact it looks like, oh, hey, that's basically a 1 minute 9MA test, because I record my screens and I was trading it live, you can see that, hey, the 1 minute 9MA was actually kind of right here when price action started to taper up. That's when the 9MA kind of tapered to the price action. So it wasn't, hey, price action hit and then went, it's price action went and then MA tapered to it. So that's something to be extremely careful of when you're going and you're building out your spreadsheets, because that's like curve fitting 101. That's the easiest like blunder that you can make right off the bat. And same thing for any indicators that have a window that they can repaint in. Looking back, it's going to be like, oh, wow, all I have to do is buy on the arrow, sell on the arrow. But then in reality, when you go to trade it, obviously that's not the case. So just a slight cautionary tale with that. But so I didn't take that first one. The second one is the the second one, this one I have a lot of data for, and this is the one that I'm allocating a full R of risk to. This is the first 5 minute 9MA tap after a valid PMZ sequence at or beyond previous day's range. So this is something that has a win rate for me currently of about, well, I didn't put in today's, so the win rate's going to be a little bit lower, but has a win rate of about 80-ish%. And then the The percent that price action continued to trend to a new high or new low a day is about 63%. So that's something that when you're in the trade, let's pop over to a 5-minute chart. This day right here. So it's this sequence right here, essentially, that it ended up flushing through and stopping me out, and then that I ended up avoiding the PMZ trade and ended up going back. So that's why it was peak frustration. But let's stay focused right here on this first 5-minute 9MA tap. So yeah, so essentially what that is and what that is saying to me and how I've been navigating and executing on it is after we get a valid PMZ tap and then we break out to new ranges on SPY, whether above or below, I initially, when I was trading it and I was solely focused on the PMZ, there were a lot of times where I would either miss it, the PMZ trade, and then I spend the rest of the day watching the move, and I'm like, there has to be something here. Like, I'm not. This doesn't feel good. It doesn't feel good to just like only focus on the PMZ and then the trade manifests, and I'm not in it, and then I'm not taking advantage of the rest of the day, and or I'm in the trade, I over trim, like I'm trimming too quickly. It's bouncing off a lower down, like trim, trim, trim. Okay, it comes back into, maybe a couple 0.0% away from the PMZ. I'm like, man, I'm just going to lock it up here. And then it turns around and then it flushes low a day or makes a new high a day. And I have 20% of my position remaining. That was something that I also wanted to mitigate by having these secondary sequences that have a higher probability of, that just have positive skew. So essentially, what that one is saying is that there's a 80% likelihood that for it to tap and move off at least what I'm risking. So if I'm typically risking 0.06%. So it would only count as a win technically if it moves at least 0.06% or more. And then you see the data also. This is the one that's more important to me. It's price action continued to trend to new higher, new lows, yes or no, and then that's the percentage. So that tells me that if I'm in a trade and a trade starts working, I know the likelihood that that trend continuation will take place. Of course, past results does not necessarily mean the current trade that you're in on the random day in the ether that you're trading the system on is going to express itself that way, but it does let us know that there is some positive expectancy, that especially when we integrate it into that larger time frame analysis, we get that entire distillation to the trade that we're in at that particular moment. For me, as this was happening, I was like, are we really about to purchase this on the bottom side of the supply zone when we said that we didn't want to get it right here? So I was a little bit back and forth, man. Honestly, that was something where again, just some cognitive dissonance being there, but it was something that, hey, I just want to rely a little bit more on my playbook and my strategy set and not super heavily weight the fact that there's a supply zone up here that can easily be breached, especially when SPY has been doing this, right? Think about how many supply zones were in here that SPY absolutely just like mutilated through and didn't even look back. So it wasn't something that I made the decision and I took the L, and that's okay because we made it all back on this move back down. But that's just trading, my friends. Nothing's ever going to be 100%. So that's at least, I guess that's the bulk of a little bit of how I've been navigating. It's something that I've been in search of for a while now, in particular with my trading and with a strategy and or with um, just particular playbook trades or the financial instrument rather that I'm trading on, because I used to do options. Now I'm trading equity. I did options for a few years, and especially when I was trading the options on the open, even when I was doing extremely well, trading it off the open, getting the momentum in the first 10, 15, 20 minutes, in the back of my head, I was like, yo, is this something that you'd be comfortable putting 50, 100, 200 contracts on X amount of years down the road? It wasn't something that felt sustainable, on the first opening candle, buying 100 contracts on Tesla as it's dipping down to pre-market low. Even if it worked when I was trading it with 5 or 10 contracts, it still felt that it wasn't something that I could scale. So it's like, what are we doing here? Are we going to spend all this time working on something that we can't scale, I guess, in theory, to infinity? So that was always something in the back of my mind. So that's why, with this in particular with SPY, while I'm executing SPY equity right now, when the point comes where it's like, hey, are you going to get in with a couple thousand shares of SPY, or are you just going to go and transition over to futures? It's like, I'll be transitioning over to futures and playing the ES minis. still off of the SPY charts and the SPY data, just clicking market in, market out on ES Mini versus SPY. So the same thing. So built within this system is the fact that it can technically into perpetuity scale as much as I need, as much as I want, as much as my performance dictates. So for me, what I've been doing also with the system is I have a performance review period for myself every 2 weeks. And if I perform well within those 2 weeks, then I get a risk bump for the following 2 weeks that gets locked in. So I'm essentially trading and I'm incentivized to trade well, right? Because we're trading our own money. So we want to trade well and make money. And then I'm incentivized to review at night. So I record my screens throughout the day. And at night, I spend about an hour to two, or hour and a half to 2 hours going through my screen recordings. And I have Evernote open. So I just get a full like 34-inch. I have a 34-inch vertical ultra wide monitor, top to bottom, just all notes that I'm extracting from my screen recording about how I executed on the day, which then incentivizes me to come into the following day, execute appropriately, follow the systems, follow the probabilities, follow the spreadsheets, etc. And then at the end of the 2 weeks, all of that work is in a meta loop. We're just trying to build good positive dopamine loops for ourselves to keep going, because trading is very difficult. And if we're not at least partially rewarded while doing it, we probably won't sustain the learning curve. Then you have that meta loop of, hey, now I'm granted a risk bump after 2 weeks of executing actually on the system that I'm doing all the prep work, the data work, etc. for. So that's kind of where I'm at, man. And it's been a good time. It's been a good time. It's been very fun. It's been very rewarding. It's the hardest I've ever worked on my trading, and thankfully, they're the fruits are coming from it, my friends. So that's kind of initially all I really had off the bat. Now I'm definitely open to questions, comments, concerns. I could uh, answer Mott's question here. I can pop up YouTube as well. I'm not sure if there are any questions over there, but just get myself situated and then pop back in. Can explain supply and demand zones for you, my friend. Okay, so essentially the supply and demand zones, that's just, oops, 1 second. In a moment. And then take this off. Yeah, so essentially for me, that's just areas that big money, quote unquote, is potentially interested in, re-engaging in this particular name. And it has a higher likelihood of a trend change. Yeah, for the trend to change direction. So it's these larger levels. Let's say SPY pops up. That's as far as it went. It dropped. It popped back up. This little sequence, this little area has kind of a gap. There's a little bit of a price vacuum there. There's some price discovery that needs to, take place and be recalibrated should price action revisit it. And that's kind of in this zone was drawn, a couple weeks before we even got here. And so you can see now how there's a little bit of a stall. What I want to reiterate is the fact that, again, think about how many of those zones were drawn down here and then right here. And maybe while initially we respected it as we're coming into it and then moving down, eventually you just burst through and you continue going higher until you meet the next one. So it's not a super strict adherence to it. It's just trying to get a general, I guess, war map of what's going on, where the probabilities are in your favor and where they're not, and then positioning yourself accordingly. That's my biggest challenge right now is, while I am executing on a small time frame and while I have secondary sequences that I'm doing my best to extrapolate out to larger time frames to hit those larger time frame moves, I need to do a better job at dictating how aggressively I'm imposing that larger time frame bias on my intraday execution of the PMZ. Like, how much does it matter that SPY is at a daily supply? If one second. If I'm coming, oops, whoa. if I'm, my goodness, give me a second. If I'm coming in here and taking, intraday trades on the PMZ. So that's that's that part of my trading that I'm working on now, because I've been granting myself risk bumps via performance for a couple performance review periods now, and I'm coming up on the next one here. I did all right today. As long as I don't blow my account tomorrow, I'm gonna get another one, hopefully. So, wish me luck tomorrow. But no, I mean, I'm just joking, of course. But ideally, I'm gonna do my best to perform tomorrow, and that's another wrist bump, and that's ultimately the little bit of dopamine that gets you set up for the next 2 weeks and the next 2 weeks and the next 2 weeks. And the risk bumps that I'm doing right now, it's about a 25% increase in risk. So think about if your one R, your one risk unit is like $100 for 2 weeks. The next 2 weeks after that, you're locked in at $125. So while 25% might seem like a lot, where you're like, whoa, that's kind of a big increase in risk, all that is for that coming 2 weeks is just 1.25R of the last week's risk. So, you get a little bit of slippage. You don't get you get in a bit early, you get out a bit late. That's 1.25R. So it's not that big of an increase in risk where you're immediately going to feel it, or where you're going to compromise your execution sequences because you're like, whoa, I have so much more risk on. Like, hey, all these beliefs about money are manifesting and coming up to the surface, and I'm trimming too quickly, and like I'm scared because I put so much size on. It's like, no, it's kind of like in the gym. If you just maxed out at 225 on your bench, next time you probably want to try 230 or 235. You're not just going to go in there and put on 275 on the bar, and then it's like, crush your solar plexus, right? So we're trying to we're trying to focus mainly on executing and on trading well, while slowly implementing an actual system to get us to size. Because something in the past that I honestly disliked about the community and at large, like some of the common advice was the fact that it's like, hey, just focus on trading, don't focus on size, that'll come. And in my head for years, I'm like, how is it supposed to come if I'm not positioning myself to be able to appropriately allow it into my trading? So that's kind of where, building out that performance review period for myself has helped me welcome it if and only if I trade well. And when I do welcome it, I'm not welcoming so much of an increase in size that it's potentially compromising, hey, the last 2, 3, 4, 6 weeks of trading if I don't execute on my trading appropriately for the coming 2 weeks. So I hope that makes sense, my friends. But yeah, honestly, das ist das. Let me do one thing. If you folks are potentially interested in the PMZ, the big three, or anything else that Simpler offers, there's a pretty massive Black Friday sale going on. So definitely something that you folks can kind of pop in here, take advantage of. Encourage you, once you get the indicator, start testing it out, man. Go on the weekend, build out some spreadsheets. It's fun. Like, spreadsheets used to be a little bit daunting to me, and maybe saying spreadsheets are fun is like one of the most nerd things I could have said right there. But it's fun, man. It's fun to know, hey, if I put in 4 to 6 hours, let's say this weekend, doing the spreadsheet, I can into the week know if that idea that I had, if there's any like sliver of positive EV. So instead of getting, let's say, some indicators or using the strategy set, whatever it is, and then going and figuring out over the course of 2, 3, 4 weeks whether it makes sense or whether it works to the degree that you're able to understand and execute it on, that little bit of extra work on the front side helps you avoid a lot of extra potential carnage on the backside. So, but yeah, I'm gonna pop this in the chat. Copy, paste. And then if you folks have any questions just about the spreadsheets, 1 second. About the spreadsheets, or if you're, curious about building out your own spreadsheet or whatever, just about the PMZ trading, what I'm doing on SPY, drop my email in the chat as well. Feel free to hit me up and then we can collaborate and do a little bit of work. So, alrighty. Just check YouTube, make sure I didn't miss anyone over here. Did not. Well, we can call that a session then, my friends. If no one has any questions, I appreciate the pleasure of coming on here, sharing a little bit of what I'm doing right now. And then, as always, you can always ask questions in the chat or via email. Appreciate you and thank you so much. Let me figure out how to get out of this restream. Omer, brother, you know how to get out of this restream? Appreciate it, Brian. Thank you so much for showing up, man. Okay.